Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into a new week here? We have seen the US dollar index gain significant momentum today on Monday, which is in fact very typical here as we transition into May. The dollar index is normally one of the strongest performing currencies, and we're starting to see certainly that follow through as we begin a new week and as we begin a new month. Now, not only that, usually the strength of the dollar over this month can also put significant pressure on the metals such as gold, silver, palladium and platinum. And of course, last week we had the FOMC statement, the European Central Bank announcement, and this week we have non-farm payrolls. All of these have been catalysts for some big volatility, which of course provide you with some great trading opportunities. So with that, let's actually move straight over to gold, and I'll talk you through exactly what we're looking at as we go into a new week. So first of all, note, hedge funds and money managers, they have reduced their net long positions in the latest week on gold. The gold-silver ratio has broken out to 115 to 1, which does typically put pressure to the downside on gold and silver. In fact, if I bring you over to silver, silver is down almost 1% on the day today and does look vulnerable right now for a corrective move. If we were to break below the weekly lows, this is where we could start making a move back towards $14.50 and potentially even a move back towards the recent lows here around $14 per ounce if silver follows the normal route over May, which is to be under pressure. And we see the dollar index picking up momentum against many of the major currencies, but also pressurizing the metals priced in US dollars. So moving back over to gold, you can see even on Monday where it's had an attempted breakout, has subsequently pulled back to 1,701 US dollars per ounce. I would look at gold this week in terms of consolidation and range-bound price action. So if you have a look here where we found resistance just going back to Friday's lows here, you will note where we had a tap back down towards 1,670 US dollars per ounce. I would expect that over this week we're going to see opportunities to trade both ways here, so trade long and short. And of course, being a trader, this gives you opportunities to make money in both directions here on gold. You would have noted this is exactly what we did going back to the months of March and April, which were just phenomenal months for trading the precious metals, and these worked out extremely well to capitalize on the move. You will have noted the significant correction gold had at the start of March, which then set up for an immense buy opportunity at the 1450 zone. This is where we were able to capitalize over two trades, 3,500 points, before we finally banked the remainder of that trade at $1,739. For those of you that watch our regular reports, you will be very aware of that trade opportunity that we took advantage of from the 1480 zone to the 1680 zone, bought back in again at 1589 and traded that up to 1739. We then shorted, we took the trade back down towards the lower end of the channel, went long, and we've continued to be in and out on this day-to-day volatility with the precious metals. Now, what I would observe over this week again is that as we transition into May, normally we can see some pressure to the downside for gold. So it would not be a surprise at all if we were to get a pullback and another test this week back towards that 1,670 US dollar per ounce handle. So I wouldn't be surprised at all if we get that sort of price action. At the same time, if we were to have another attempt to break out and we came back towards the upper end of the channel here, I could see us also sitting within this range where we get an attempted breakout back towards the 1730 level. But if we find resistance there, this is where you could easily get a rotation back towards the lower end of the channels again. Again, you really want to look at opportunities to play the range here on gold. Note that hedge funds have reduced their positions. Normally the month of May is not that supportive for gold, and also the gold-silver ratio is breaking out to the upside. So these are all negative factors for gold right now. But at the same time, you have some major news items this week, including Friday's non-farm payroll, which can be explosive. And these sort of major news items can see sudden inflows into gold. So really you want to capitalize on the ranges that I've just discussed. Now, moving over to silver. Silver here right now, if we do get a break below the weekly lows, as I've mentioned, this is where this sets up for a potential rotation back towards the lower end of the channels. If we were to suddenly see a surge this week in gold prices, naturally we would expect that to lift silver, and this is where it could break back within the channel again, and this would have to marry up really with the gold-silver ratio breaking back down again. This is where you could then see an explosive move higher for silver. At the moment, that doesn't seem as likely. We look like we're going to build some pressure to the downside here for the metals, and we could get a rotation lower. The US dollar index has picked up momentum in line with typical cycles that we do get at the start of May. So that's already beginning to play out. That can offer some great opportunities to trade the inverse correlations to the US dollar index. Now, another market you absolutely want to keep on your radar right now is crude oil, which was up over 30% in the latest week. Today alone, it's up 13%. You can see now where it has broken out of a major channel here. Also, hedge funds and money managers, they have significantly increased their net long positions with crude oil in the latest week. The next major levels that you should look out for now would be that 22 US dollar per barrel handle. So we're starting to build some positive momentum here. Typically this time of year is constructive for crude oil. Note as well, we've now moved over from the May contract, which broke down as low as sub 40 US dollars per barrel. Yes, minus $40 per barrel in the May contract. We've now shifted over to the June contract, which managed to find support at 10 US dollars per barrel last week, has subsequently doubled in price off those lows. And this is what we mean by the volatility that we're seeing in the market right now. These unprecedented times are providing extraordinary opportunities to benefit from this. There are two major ways that you can capitalize right now in the markets. Now, of course, many of you are still on lockdown at the moment, so it gives you an opportunity to create another means of cash flow to be able to make profits fast in these markets. And also for those of you who are seeing no real returns in the bank anymore. So as you know, most banks, their interest rates have gone to zero now, and this provides you with a great opportunity to be able to get significant gains within your portfolio, compound it, and there's never been a better time to really learn a research-driven approach which gives you edge in the markets and gives you the ability to upskill and manage your capital and grow it, and also create recession-proof cash flow for the future, which is essential during these times. You really want to prepare yourself now for post-COVID-19. Are you going to be set up with the right skills moving forward so that you can capitalize, have multiple streams of income coming in via trading, via appreciation of capital, rather than being stuck trading outdated technical strategies that just don't work in today's market conditions? So what you really want is an edge in the markets where you're looking at market intelligence, you're looking at data, you're observing what the hedge funds and money managers are doing in the market versus all of the retail traders, so versus the newbie traders who are taught incorrect strategies for trading the markets, which is why they're getting constantly chopped up. You also, of course, want to marry up your trading strategy with cycles in the market, seasonality, correlations, trade flow, geopolitical news, fundamentals, our own in-house market intelligence, and this is what will give you an edge in the markets. So if you would like to learn a research-driven approach to your trading and join a community of successful traders, there is an opportunity for you to join us at the Gold and Silver Club. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to real-time trade alerts, trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information, please visit www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.